Yeah. Well, thank you all very much, and thank you, Jeremy, for arranging this. I think this is a great opportunity. And I do think that conservatism is a big and important topic. It's also a topic that divides the profession very sharply. Okay, so in today's talk, I'll try, I don't know whether I'll succeed or not, but I'll try to bring out the source of the disagreement. Why is it that we are divided on this important topic? And I think to bring out the source of the disagreement, the first three bullets over here are rather important to understand and to agree upon. So we ought to agree upon what accounting conservatism is. And I don't think we fully agree upon it right now. We ought to agree upon how conservatism changes the informational properties of accounting reports. And I don't think there's agreement on that. We need to agree upon how to formally represent conservatism, some statistical or mathematical representation. I don't think we agree upon that. And consequently, we don't agree about the economic consequences. Okay, regarding economic consequences on the theory side, I don't think enough has been done. Okay, we are severely lacking over there. The empiricists are forging ahead, but in the absence of theory, I'm not sure that they're interpreting the results in the right way. Okay, so I think theoretically, we ought to do a lot more on the last bullet point over here, but we first need to agree about the first three. Okay, so let me start with what is accounting conservatism, and I think the layman has a better sense of what conservatism means than we academics. So let me start with a conversation that one would expect to hear. Let's suppose that John and Susan are standing in a picture gallery and looking at a painting that's on the wall. It's pretty prominently displayed. And John turns to Susan and says, "What do you think the market value of that painting is?" And Susan says, "I don't know. I don't buy and sell art, and I'm not in touch with the art market, so I don't quite know." And John says, "Give me a conservative estimate. Give me a conservative estimate." And I think that conservatism in accounting is similar to what John means over here. Okay, so I'll try and develop the theme. Clearly, there is no counterpart. Can you all see the entire screen, or is this picture sort of? Let me minimize this picture. Okay, there clearly is no counterpart to conservatism in economics or finance or statistics. So basically, we have to develop a model of conservatism starting from raw intuition. Yeah, and what is clear to me is that in accounting, there's a deep-seated conviction that when we don't know the exact truth, we ought to form judgments and estimates that are somewhat conservative. The common wisdom in accounting is anticipate and recognize no gains until the gains have actually happened, but anticipate possible losses, even though the losses may occur many years later. And I think that this feeling is embedded in GAAP and FASB standards, and I think they're infused with conservatism. It's all over the place. And here's some common examples that one would normally give about conservatism in accounting. We mark down asset values, but we don't mark them up. For example, lower of cost of market or asset impairment is of that nature. We provide loan loss provisions, bad debt reserves, and many other reserves way before losses have occurred. But we don't do that regarding gains. We are very willing to treat resource outflows as expenses and somewhat reluctant to recognize them as assets and put them in the balance sheet, especially intangible assets. We do not recognize revenues until almost all the uncertainty in a sales transaction has been eliminated, and so on and so forth. You can think of many other examples. But the point I'm trying to make is that conservatism is not some trivial thing. I think it is embedded very deeply in GAAP and in accounting conventions and standards. So then the big question is, does conservatism make sense? And I think that's a rather important topic, okay, which is the bottom line of that 4-point bullet that I introduced earlier. Let me tell you a little story. why did I get interested in this topic? So like many of you, I'm sure this is true of many of you, our interest in conservatism was kindled by Watts's article, 2003, Accounting Horizons. And we certainly owe a debt of gratitude to Watts for bringing that to our attention. And when I first read the article, I was pretty impressed with it. I said, this is a deep and important insights. And what I particularly liked about the article is that Watts pointed out that conservatism is not simply a relic from the past. It has important economic consequences. Okay, and I think stimulated by Watts' article, and I think it was very stimulated by Watts' article, the research on conservatism exploded. And consequently, even at Minnesota, we had workshop speakers talking about conservatism. There were papers presented on conservatism, and debates occurred, and those debates got me thinking. But here's the one incident that really struck home. So we used to have a little puppy, and the puppy in the middle of the night would frequently go downstairs and set off the alarm. Okay, so the alarm would go bang, 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 and I would jump out of bed and run downstairs, what happened. And there was a puppy standing below the window, simply shaking her butt. So you would shake her butt and the alarm would go off. And it struck me that having a very sensitive security system may not be a good thing. Okay, it does provide a lot of protection from outsiders, but it also has a lot of false alarms. Okay, so the idea of false alarms was born that way in our mind, and then it was a simple leap from there to debt contracting. It occurred to me that if we make the accounting system more conservative, there are good things to that, but you also begin to see false alarms, and the false alarms will keep increasing as you make it more and more conservative. I said, false alarms, where is that in Watts' argument? It's not there. So is something is missing. So that's what got me thinking about it. Yeah. So let me jump to informational properties. And right at the outset, I'm anticipating a possible question here. Right at the outset, we should recognize that we only talk about conservatism when the market value of some object cannot be determined at reasonable cost. So there's basically uncertainty in there. Okay, that's when you say, well, give me a conservative estimate. All right, so there's a definition of conservatism that I think most people do agree about, namely the first bullet over here. So conservatism requires that the verification standards for reporting good news are much higher, much more stringent than the standards required for reporting bad news. I don't think there's any disagreement about that. Basu and Ross was then translated that into the following. They claim that conservatism is equivalent to timely loss recognition. And that's where the problems begin. Okay, so this notion of timely loss recognition is a literal translation of a purely statistical relationship that Basu found. And the question I want to ask is the informational interpretation correct? Okay, does that make sense? So let me begin with a simple example to argue my point of view. And this is an example that was first presented by the Gigler and Hemmer paper, 2001. And strangely, this paper actually precedes the Ross-Watts article. Okay, but this is a very simple example. We can all relate to it, and it makes enormous sense. Okay, so basically in GKS, we took this example and blew it up. We generalized it half a lot, and then got a lot of general results. But let's look at this example. So let's suppose it's a binary example. So let's suppose the financial condition of a firm could either be good or bad, okay, represented by the states G and B. And let's suppose that because of conservatism, so conservatism says, so the accountant does not see the state directly. They only see evidence. And they have to analyze that evidence and then issue a report. And let's suppose the report could be either a high report or a low report. So that's YH and YL. Now, when you bring conservatism, conservatism says that to issue a low report, if you're somewhat suspicious that the state is bad, you ought to issue the low report. Okay, which to my mind would mean that when the state is truly bad, meeting this low threshold of evidence will almost certainly happen, and therefore with probability 1 will get the low report. Okay. Now there are a lot of academics, okay, I think especially on the empirical side, who say, aha, that's timely loss recognition. Okay, whenever the situation is bad, whenever the financial condition is bad, you get a low report. That's timely loss recognition. Okay, but if you think about it, the information content of the low report is completely undefined. Okay, you cannot tell me that's timely loss recognition. It's undefined. You have to tell me what reports you get when the state is good. Okay, when you see G. Okay, so turning to G, the conservatism says that you can only issue the high report if the evidence supporting G is pretty darn strong. Okay, which means that there are going to be many times when even though the state is really G, and you don't know that it's G, but God knows it is G. So even though the state is G, you cannot get that kind of strong evidence required for issuing a high report, and therefore you have to issue a low report. Okay, now you look at this situation. So lambda is the probability of issuing a low report given the state is G. Okay, look at this situation. When the state is G and you issue a low report, that's a false alarm. Okay, that's a false alarm. And clearly, when you make the requirements for issuing a high report more stringent, you make the accounting more conservative, but lambda will go up. Okay, the chance of meeting this high threshold is going to decrease, and therefore lambda will go up, and therefore the probability of false alarm will go up. Okay, where is timely loss recognition? It doesn't come through. It's not clear to me what timely loss recognition means. It's a nice phrase to throw in front of people, but what exactly does it mean? The three things that come through very clearly in this simple case is that when you increase the degree of conservatism, firstly, you'll see the low report more frequently. Okay, the probability of the low report is p lambda plus 1 minus p, and that's clearly increasing lambda. Okay, and I don't think people will dispute that. If you make the accounting system more conservative, you will get low reports more frequently. I think most people will agree with that. Okay, but the key property over here is that as you make the accounting more conservative, you will have more false reports. And consequently, because of more false reports, the information content of the low report will get diluted. Okay, so again, the notion of timely loss recognition does not come through. You get the low report very frequently, and sure enough, you get it for certain if the state is bad, but the low reports are very low quality. So what are you going to infer from it? Okay, I don't know what timely loss recognition means. Okay, now you can take other examples of this kind. Okay, or you can formalize all this in terms of likelihood ratios and so on, and part of that is in my slides. But I want to point out that you can take other examples of this kind and the same message comes through. So here's another example. Let's suppose that theta is the unknown value of some asset. And again, to keep things simple, let's suppose the unknown value could be high or low. Okay, the accountant obtains n independent estimates of the asset's value. So nobody can observe theta directly. Okay, but you can ask for estimates from various experts, and the accountant gets n experts to give them the estimates. And then he reports to the general public the lowest number of these estimates, okay, the lowest estimate that he gets. And I think intuitively, most people would say, yeah, that's conservatism. Okay, that's conservatism. But you have to ask the question, what is greater conservatism? What is greater conservatism? And what is lesser conservatism? Okay, or more liberal? And the knee-jerk response to that is that if you change the reporting rule and say that the accountant reports the highest estimate, that's liberal. That's liberal reporting or less conservative reporting. I don't know what to make of that. I personally, I think the two reporting rules are not comparable in terms of conservatism. But here's something that is definitely. Suppose you increase the size of n. Do you have a more conservative accounting system? Yeah, and I would argue that it must be true. It must be true that if you ask for 5 estimates and report the lowest estimate, that's more conservative than asking for 72 estimates and reporting the lowest. Okay, so I have no doubt that a larger N represents greater conservatism, a smaller N represents less conservatism. So let's now ask the question, what happens to informational properties as you increase N? And you can prove the following 3. Okay, you can, the proofs are not, but some of the statements are obvious. But there's one proof there which is quite difficult, but it is provable. Okay, if you increase N, the probability of observing a low report, it goes up. But the low report becomes less informative. Okay, that's fairly intuitive. If you ask for 100 estimates, the chances that somebody will report low is pretty darn high. Okay, so the chance of observing a low report will go up. Okay, but when you do get a low report, what does it mean? It doesn't mean much. And conversely, the probability of observing a high report will go down. But if you do get a high report, it is very informative. It must mean that everybody said high. That's very informative. And thirdly, the frequency of false alarms increases as you increase N. That's exactly the same message that you got from Gigler and Hammer. And I think you can construct example after example after example, and the same thing comes through. Okay, again, what does timely loss recognition mean? Okay, so I'm sort of casting doubts on this timely loss recognition. What does it mean? Okay, and timely loss recognition is the guts of Watts' argument. Okay, now generally, so you take these ideas and put it in an accounting context, and here's how I like to think about it. So think of 3 sets. Omega, the first set on the left, is a set of all possible economic transactions and events that could affect the firm's future cash flows. The next box are the set of accounting reports that can be issued, and let's call that Y. And the third box are the future cash flows that you are interested in predicting. Okay, now, there's a mapping. What is true is that the set of economic transactions and events, these raw transactions and events, are never reported for whatever reason. It could be because of proprietary costs, it could be because of information processing costs, or whatever it is. That's not reported. What is reported is the accounting report. So there's a mapping from omega into Y. And that mapping is governed by accounting standards and conventions that are prescribed by the FASB. Conservatism is embedded in these measurement rules. Okay, the mapping from transactions into accounting reports, you could put conservatism in that mapping. Okay, now, how does that change things? How do you represent conservatism? Okay, firstly, let's observe that these past economic transactions are informative about future cash flows, but not perfectly informative, which means that there is a stochastic relationship between omega and X. Okay, now, since Y is simply a mapping from omega into a set of accounting reports, there will be a stochastic relationship between Y and X. Okay, now, when you change the degree of conservatism, when you change the mapping from omega into Y, or you change the degree of conservatism, the relationship between accounting reports and future cash flow will change. Okay, the relationship between omega and X will not change, but the relationship between Y and X will change because the mapping from omega into Y has changed. And when you change the relationship is still stochastic, but when you change the relationship between Y and X, you'll change the information content of accounting reports. So one can characterize conservatism in 2 possible ways. You can either put it into the mapping from omega into Y. You can try and characterize that mapping and talk about how that mapping changes as you make accounting more conservative. But finally, to get to economic implications, you trace that altered mapping to an altered relationship between accounting reports and future cash flows. Okay, unless you can say how the information content changes, you can't proceed beyond that. Okay, so what GKSV do is not try to characterize conservatism in terms of relationship between, in terms of the mapping from omega into y, but to characterize conservatism into how the information content of content reports changes as you change the mapping, okay, as you introduce conservatism. And we draw upon the intuition that we get from simple examples. Okay, the most important example, which we use extensively in our paper, is one that I think all academics can relate to, and it makes a heck of a lot of sense. We all give exams to our students, and then we get back sort of very detailed answers from the students, and the detailed answers are not given to outsiders. Okay, there are potential employers out there who are trying to judge student abilities by looking at their grades. We don't give them the raw answers to exams. We give them a grade. Okay, so we map the detailed answers into grades, in letter grades, and only letter grades are disclosed to outsiders. Now, if you make the exam more tough, or if you make the grading more strict, that's like introducing more conservatism. And clearly the mapping from raw answers to letter grades will change as you do that, as you make the exam tougher, or as you make the exam more, as you make the grading more strict. Okay, but then the grades are going to mean different things. The meaning of an A grade and the meaning of a B grade will change depending on how difficult you make the exam or how strict you make the grading. It's clearly true that you make the exam harder. If you make the exam harder, the probability of a high ability student scoring a B will go up. And the same thing is true of the grade that a lesser ability student will get. I'm just picking one example. Okay, the distribution, in generally, the distribution of grades will move to the left in the sense of first order stochastic dominance. Okay, in response to that, what you typically do is to change the cutoff for getting an A, B, and C. Okay, so if you make the exam harder, then the cutoff for scoring an A will be lowered. But in spite of that, in spite of lowering the cutoff, you cannot determine what the grade would have been had the exam been easier. Okay, and what ends up happening is that the probability of false alarms goes up. Okay, as you make the grading more strict, or you make the exam harder, the probability of false alarm goes up, in the sense that the probability that a high ability student scores a B, gets a grade of B, will increase in spite of the fact that you change the threshold. Okay, so most of the intuition, most of the characterization in GKSV was based upon this kind of example. It clearly, there's a parallel between that example and the first example I gave you, a second example I gave you, and so on. Okay, so let me now skip to this. What is conservatism? So people have different notions of what conservatism is, and I want to ask the question what it is not. Okay, what it is not. In my mind, and I'm sure there'll be some disagreement about this, we should not think about conservatism as transforming the signal space. Okay, so for example, a monotone downward transformation of a random variable is not conservatism. And here two simple examples which are equivalent to monotone transformations. If the true value of x, if the true value of some object is x, and the report is y is equal to x minus 100, but the same 100 applies to all values of x. Or if the report is that y is equal to 0.8 times x, okay, that's not conservatism. You can define it to be conservatism, but then you're not saying anything. Okay, so unless you can tell me that some of the informational properties or the information that you extract from a report changes as a result of conservatism, if you can't tell me that, if the information remains the same, but you change the signal space, that is simply uninteresting. You can define that to be conservatism, but it's simply uninteresting. And it's not even worth studying. Here are two more examples. And this is probably more controversial. Let's suppose that the accountant observes an interval in which the true value lies. Okay, so all he knows is that X, it lies in the interval 1000 to 1500. Okay, he might assess some distribution over it and so on, but he knows that for sure it lies between 1000 and 1500. He's not allowed to report a distribution. He has to report a number, and the number has to be verifiable. Okay, and there are a lot of people who say that if the reporting rule is report the lower bound of the interval, so report X is equal to 1000, that's conservatism. That's conservatism. I strongly disagree. Okay, and that's now this is important. I strongly disagree. Why? Okay, so there's a paper by Hyun Shin, which all of you, at least some of you have read. Okay, strategic what something, I forgot the title of it. It's a Rangel. And what Hyun Shin shows that when any person observes a stochastic interval, privately observes stochastic interval, and says, well, what is the most optimistic report I can provide? Okay, what is the greatest degree of optimism I can induce among people who get my report? Then what is my reporting strategy? And that reporting strategy turns out to be report the lower bound of the interval. Okay, because notice what's happening when you report the lower bound, you're truncating the left-hand tail. You're truncating the left-hand tail, and you're telling the user of the information that values above 1500 are also possible. Okay, so the user of the information will end up attaching some probabilities to numbers above 1500, and therefore you're inducing him to be very optimistic. I don't think that represents conservatism. So if you think of only the signal space, it looks like reporting a lower bound is conservatism, but you think in terms of information, and it's not conservatism. The next example is again one that is commonly cited in accounting. Reporting R&D as a line item on the income statement rather than putting it on the balance sheet, that's viewed as conservative reporting. That's viewed as conservative reporting. Okay, to me, that's complete nonsense. Okay, given that if you want to think of conservatism in that way, if R&D is put on the income statement but is not line itemized, if it is simply pooled with operating expenses, then I can say well, that's conservatism. But if it is listed as a line, if everybody knows what that number is, it's put there as a line item, then where do you put it doesn't matter. But it surely is true that you can measure R&D in a conservative or liberal way. Okay, it's often the area between the boundary between R&D and operating expenses is very, very fuzzy. So people will disagree whether some expense is research or whether it is an operating expense, and therefore you can calculate R&D. You can count R&D in a liberal fashion, or you can count it in a conservative way. Okay, and in that sense, one can talk about conservatism. But once you measure it, where you put it is really not an indication of conservatism.